A very good afternoon to you traders. Mark here from the day trading room. Time is 10 past 12 in the afternoon, London time on a Friday afternoon. It's been a long time since I've done a video, but the markets have increased in volatility, which is fantastic for day traders. Last video we talked about how quiet the markets were. They're picking up a little bit. Crude oil was in a range. The Dow, it didn't really know what to do with itself. And now we've got a lot more intraday volatility in the indices, in the currencies, in the commodities, basically across the board. So whatever you're trading, stocks, whatever you're trading, there's some action out there for you, which is great because this is what we live for. This is what we wait for. This is why we have to sit through quiet periods. It's why we protect our capital and why we just look for those singles during the quiet times that we can start to push the pedal down a little bit more, take a bit more meat out of the market when we're starting to get that volatility. Unfortunately, last week and the week before, we've got a nice increase in volatility. Not crazy, but just enough to get those extended moves. Hold on for those longer trades to make the risk reward worthwhile. So I'm going to talk through a couple of days on crude oil and how I've changed the way I've approached it. But first of all, I just want to apologise for those of you waiting for the new program. I know I said it would be soon and working on it, but as you know, guys, I'm a trader first and foremost. So in my spare time and the time after the market, before the market opens, I do some little bits and pieces on the program. But obviously, as the market's been more volatile, it's been less opportunity to put hours into that. So I know you guys understand that, but I just wanted to get it out there. But I really think it should be no more than two weeks or so away now. But volatility permitting, as I say, trader first and foremost, and I know that you guys realise that. But anyway, let's talk about crude oil. I'm focus on 2 days on crude oil, and what I'm going to do is I'm going to take my actual trades and we're going to run through them together, and I'm going to see what I could have done better, what I did well, and just really drilling down into two of the more volatile days on crude oil. I was going to include a Dow day as well, but probably make the video too long, and maybe I'll save that for another video. Just going to focus on one thing for now. So crude oil, I've got a 60-minute chart here, and I spoke last time in the video that while we're in this range, I'm not looking for trailers or for larger term scales. And I said, while we're in the 60-minute range, and this is the importance of looking about the range and the time frames. While we're still in this, when I'm taking longs and shorts, when I'm taking trades, I'm only looking for little extensions my way. I'm looking to take the trade out, maybe leave a small little bit on, but I'm expecting to get stopped on it because it's that sort of market. It's been up and down. It's in a range. No one's panicking. No one's getting greedy. There's no real emotion to it, and so the edge doesn't last as long. And for me, the edge is trade when you can see the order flow is definitely in one direction. You can see that there are targets to be hit. You can see panic. You can see retail getting stopped out. You can see institutional order flow coming in. So I wasn't ever looking for larger targets, and that was the case because we're in that range. Now, what happened here is we had a little break out of the range, and this was the perfect storm. And it's so good actually that I've included it in one of the examples of the program for one of the setups that I like on a larger time frame. To give a good example that you can use on a shorter time frame, but this just tweaked everyone's buttons that it just made it such a great few days of trading for crude oil traders. Now, we broke out the top of this range, and I've tried to squeeze it all in, but it had gone on for much longer than I thought actually. That's a little bit better. It's a 60-minute chart. You can just about make out what I'm talking about. There was the range that we had, roughly the high and low. We've been in that for a while, and then the past week or so, before we broken out, that is, we pushed up to the top of that range, and we just broke up to a new high. We took out that 106, took out the high of the range, and everybody was all excited. If we go, we're off to 108, 1010, new highs. Iran's going to attack. Iran's going to carry on with its nuclear plans. Blah 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 blah. That's the risk premium we had on, and there was a lot of people in that trade. But there was a lot of negative news coming out about there being a lot of inventory. Saudis had a lot of spare capacity and all this. Not that I really pay that much attention to it, more into day trading, but I will look at bits and pieces like that just to get an idea of what the sentiment is, what other people are looking at. Not so much that I can make a judgment based on that, but that I know, if this makes sense, I know what other traders are looking at. So when price move happens, I know that in the back of their mind they've got that news fresh in their mind, if that makes sense. That's something else I'll talk about, but I'm digressing slightly. But anyway, we broke to the high of that range, and we held and we closed, and it all looked great. The next day we drifted down, and that's not unexpected, is it? You break a high range. I'm just going to get my drawing pen out here. Okay, just had to reshuffle the charts about a little bit. The drawing pen was encroaching onto the recording area and just gets a bit messy. So anyway, where was I? We broached the high of that range. We rolled back over and we retested, which is what you can expect. That's normal on any time frame, 60 minute, 1 minute, whatever. It's not unexpected. But then when we spent the next day, and then we just really just, I think that the longs just thought, you know what, I've waited too long for this. It's not working out, and it just was a perfect storm. So anyway, we drove down and we paused. That was really, 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 really weak action, guys. Really weak action. I was so looking forward to the next day on this because we closed there. And actually, I did comment on Twitter. People are trying to. I've forgotten actually what it's. How some traders think, and looking at what some of the things people are saying. People are just trying to pick bottoms all the time, or they're trying to be right all the time. And I made a little comment and said, listen, I don't care. I don't care about being right. I will sell. It was up at 102. I will sell 200 ticks lower if I think the setup's right. Or I will buy 200 ticks higher. I couldn't care less about getting the bottom or the top, or being right about that. I told you that was the bottom of that. I couldn't care less. All I want is high probability trades. And actually, it came true. Later on the next day, I was selling 200 ticks lower and making money on the short side. That's really, it sort of, it proves the point that it doesn't matter where the price is. The price is just a number. It matters not. It matters what people think about the value of that price at the time. If people are panicking, it doesn't matter if it's 150 or 50. If people are panicking, they are going to sell. It doesn't matter. It's just a number. So that was just something to bear in mind. Even if you've had one big down move, and you've just got to really just look at it objectively and say, forget about what the price is doing. Let's just look at things objectively. So the next day, I'm going to drill into this day because this is an interesting day. And we pushed down to the 100 level. I was really looking forward to this day, and with that key level in mind, and the fact that we come down so aggressively from 105, we're testing that 100. My hypothesis going into the day was, there are a lot of trap longs here, a lot of trap longs. Look at that 60 minute, not even the slightest chance to get out. From that 105, bang, consolidated, bang. This was just looking like so many people were trapped, and it was going to squeeze them. And 100, even if they weren't stopped out under the bottom of that range, 100 is going to be the level a lot of people are going to be ditching. And I just thought that was just going to cause a really big flush, and that's how I tried to position myself. So let's look at now at the 1 minute chart, and we'll talk through some of the trades. So let me bring up the 1 minute, and it was a fourth. I've marked these on, and actually what I'm going to do is I would also bring in my execution sheet so that we can see exactly where in the candles we talked about. Okay, so this is after that down move, and let's put it on a 5 minutes to get into some perspective first. I don't like the way TradeStation does that. It does annoy me, that. Anyway, here we go. So we'd rolled over, and look at this. We just rolled over, and there's the open at 2 o'clock. Okay, we'd bounced stuff, and that's nice as well to see that it attempted to pop back up, and then at the open at 2 London time, we'd rolled down. And I was looking for this trade to break through 100. That was the premise of the trade, and it almost took it away from me straight away. But the fact that it held on the first tag, the first tag we got here was 9.99. I thought that's perfect. That's perfect because it's just exciting people to think that that's the low. Hey, it's just broken through by one tick, but you've got that force behind it. If it doesn't bounce from there, the whole package of the 60-minute, everything around it just says there's a lot of people trapped, and even the extra little blip there was suggesting that people are trapped. So there's the 5 minutes, get a bit of perspective, but I guess if you guys are trading it, you're going to know this. So let's get back to 1 minute and let's just drill right down into each individual trade. Okay. Oh, I've gone too far here. Here we go. Right. What I'm also going to do is I'm pause the recording and I'm going to bring in my statements. Just going to blank out the account numbers, etc., etc. So back in 2 seconds. Okay, here they are. Hopefully you can see those. I'm trying to fit it all in onto this screen. But you can see really what I was trying to do. I was trying to position myself for the drop, the drive through 100. That was what I was after. And actually, when we tagged this under here, I made a comment and said no one's flushed the chain yet. And what I meant by that was obviously we haven't flushed them out yet. There's a lot of trap longs there. I don't see panic yet. All I see is controlled selling, and controlled selling isn't what I'm after. I'm after that flush. I'm after that spike in volume. And this is really what I was talking about in this video. How I misjudged it. And came out too early, but nevertheless, profitable day, but came out too early. So let's talk about the trades, what we did. So started this short off here, 20 past 2 is London time. Average entry there was 109 and a half. And what I did is I closed all of that at just in front of the 100 level, because it didn't look like it was ready to break at that time. I was probably a little bit keen on this because we double bottomed here. We poked under. I just thought the tape looked good then. It was a good entry if you look on a short term chart. It was a good entry right at the little peak there. It rolled over, but it just didn't have the guts. It didn't have that momentum that I wanted, and it was a reasonable size position, so I did not want to be sitting through a counter trend move with that. So scratch that out. Whatever it was, 8 ticks, and there you can see that's that trade there. Anyway, I went in again now at we can see 32 and 35, so 17.5 was the average and 101.15. So this was a little bit of a scaling trade, and which is okay, fine. You have to take a bit of heat, and with crude oil it's a little bit different with the Dow. Pinpointing it accurately isn't always the case. There are some trade setups where that's fine and you're hiding behind institutional order, and basically you've got a few ticks risk and they're great, but a lot of the time there's a little bit noisier crude oil, so you've got to give yourself a little bit of room within your risk parameters. And so for me, sometimes I will spread a position out to 2 or 3 blocks around a level that I'm looking to get, because I know there's noise on crude oil. It's not something I normally do, but when the market's a little bit more volatile, trying to pinpoint it is a bit of a fine art sometimes, and not that easy. So anyway, there's the entry short, there's the entry short. Okay, now I'm looking. Now first things first for me, as always, so 17.5 and 115, and then a 17.5 to 15 there, scaling again up to 31.5, which is that arrow there, which is nice because it's right on that peak, so it's a good little tape read that. So there's the entry short, there's entry short. Now bearing in mind, guys, the premise of this trade is that I'm looking for that rollover. So if I can get a nice net short position well above the 100, I'm in a powerful position. I'm in a great powerful position. Now my stop loss wasn't far away from here. Now in terms of taking off, I was going to scale off half of the position. I was going to keep half the position, a little bit more room for the half of the position, but I was definitely going to scale off. I did not want to be in a full position as it counter trended up to the VWAP, which was possible. So this scaling here it was one of the ones that had a tight stop. That was the core. This was the one that had a tight stop. And looking just to take some money off the table with that one and just get that average better. So there was a 10. Can't even hardly see that. I hope you guys can see that. It's 131.5 was the average. Rolled over, and I took a quick 10 ticks on that, which was that there. So in the pulse down, so that's just takes them in the bag. Still nice short position. Come down, and as it's prudent to do, scaling off just before that 100 level because it's a support level. There's no reason not to. So there's the next scale, and then again we roll down 87.5, 87.5, 85, 86.5. All at 14.59. So that's all this lot here. So scaling out into that flush lower, with the best there being at at 86.5. Okay, still got a bit of position. Don't mind now adding a bit back on, because I'm in a lovely position. I've got a net short up here. I've scaled off loads. I've put some in the bank. I've scaled off on that one. I've scaled off on the Coure, and now I just want to build the position back up again. I've got some left. If it carries on going, fantastic. I'll scale, 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 scale. If it doesn't, I want to build the position back up. Unfortunately, we've got opportunity here. It pushed back up. The market pushed back up, and that was a absolutely lovely entry, if I say so myself. I can scan down here. I can look at the open. 99.84, 15.06. There it was. 19. The high on that was 92. So lovely, lovely little trade entry. Let me get the thing back up. There we go. Lovely little entry there. Just couldn't have asked for better. Lovely little take read. Just watching that counter trend push up, adding back into the short position there at 84, and then the rest of them were just scales. That was it for me. And if I just mark it off here, 84, so then 69.5. I marked them on here. I'm assuming these arrows in the right place, but you can see them down here. 69.5, 55.5, 58, 60.5, 54.5, and the last one was 31. Now, great. You know what? I was in the best entry at the top there was when I won 31.5. Best exit was 99.31. A lot of ins and outs in between, but I got the meat of the move. I got the meat of the move, and I was happy with that 100 tick move from top to bottom, and I was trading in and out of that. I'm just on the short side with a net short, but just scaling in. On the take read pullbacks as you would do, in a weak market. And I'm actually a little bit disappointed with myself here, because it actually went. My exit here was too early. Now, I got clouded with the fact that it was 100 ticks from the peak at that point there, and I shouldn't have, and it was a mistake, and it was a bad exit. Okay, profitable, very happy with that. You can't argue, but we're looking to get better. We're looking to improve. These are the days that you're looking to really maximise your strengths and draw on experience and key strengths. And I'd said that, listen, the market hasn't flushed yet. The market has not flushed yet, and I should have just been holding a good call position until we got the flush. And really, this was not a flush. Look at this volume here. It's not a flush. It's not a flush. It's only when we got to this. This was the flush. This is what should have been happening. And I was too caught up in the fact that, I had in my mind 99.70 as an exit. I thought maybe 30 to 50 ticks under the 100. And that was really, and because I'd had that in my mind when we started stalling there, I wanted to take it out, which wasn't really looking at the price action. The price action was saying, you know what, we have not flushed here yet. We're consolidating, we're holding at the lows. It does not look bullish to me, and there's no way I'd have bought it here, no way. And so there would be no harm to have a couple trailing and look for that flush. But you know what, I was a bit premature with the exit, and it happens, and sure enough, there was the flush, and that's exactly what I was after. I very much doubt I'd have held to there, but this flush here, nice high volume, a good push lower, and maybe even this spike here as we push back up, that to me looks like a nice flush point to get out. But I didn't take it, didn't hold on, and it's a shame really, because there's an extra 100 ticks in the bag there, but I can't complain. It was a good trade nevertheless. Slightly mistimed on this pullback here, but taking risk off the table, not letting things get carried away, and adding and pressing the position when it's working. So the push down there, scaling it out, coming back in on the pullback, all worked nicely. So let's move on to the 8th, which was similar, and I think I've marked them on here as well. Okay, here we go. Now this was again mistakes, but still protecting capital. And what I'm going to do now again, guys, is I'll get my executions, bring them up, delete off all the usual bits and pieces, and back in a second. Okay, here we go. So 8th of May, the open was 2 o'clock, which was back here, and you can see what a mess I made of it. I haven't marked these on actually. What a mess I made of it. The open, I was so my premise was short, because we'd just been holding at lows for so long. We hadn't even pushed back up after that hammering, and it just looked so weak. It just looked weak, and I was expecting another rollover. And I let that get the best of me a little bit, because at the open, just at the open, we've got this drive down. Tape looked absolutely weak, and you know what? I chased it a bit. I chased it a bit and I got caught out. I took a 12 tick stop. Fortunately, I wasn't in hefty size, but I realised that I chased it and I got out pretty much less than a minute after I did it, and it was about here. If you can see my cursor, I just chased it. It's my own fault. I wasn't waiting for that little retracement, and this is what I would do if I make a mistake like this, chase it, I get straight out. You know, straight out. I'd never use a 12 tick stop under normal circumstances in Crude or with a trade like that. I'd scale into the position, giving a wider stop. As I just said, you've got to have a bit of noise, unless it's a very specific setup, which is leaning on someone on the tape, and then you can use, even a 6 tick stop. Depends on the setup. But because I'd realised I made a mistake, whenever I do that, bang, I'm straight out of it. I just don't want to be even trying to manage a trade that I didn't really want in the first place. And because I chased it, I've got such an awful entry there. The tape looked great, and I should have waited for that retracement. I didn't. I jumped in, a little bit eager. You know what happens? Mistakes happen. The point is you don't let them hurt you. So bang, straight out, 12 tick loss. Happy with that. Let's move on. Now I'm still looking at this, and I wait for that retracement, it was only a minute. It was in the same minute, but I don't mind shorting at a lower point when I realise I'm right, and I got a little bit more feel of it, and I've got a little bit more of a level to work off. And so here was the short here. If we can see that, I'm going to stretch this out a bit actually because I don't need the chart so much. 73.5 average, and adding again at 71.5 as the market's pushing lower. Scale risk off at 62.5 average, 59.5 average, and 64.5 average. So I can see there's a little bit of a pattern here. At this point here where my cursor is, I'm not going to click on it because it'll get rid of the picture. You see my cursor is here, it's about the 64. I'm starting to think there's not much mileage in it. And you can see that I'm protecting my risk here, because as it pops up to the 74, which is about the average of the entry, a little bit higher, I take off the last batch. So it's a little bit of a scalp, small profit, nothing much, and then I decide to sit back a bit, and you can see the next trade is not until 14:39, so a good 35 minutes later. So let's move on to that, because got really caught up a little bit in the excitement, if you like, of the open, seeing it run away, seeing the weak tape, jumping on and not waiting for that retracement, which I've preached about before. I've said you've got to wait for that little pullback, and as soon as I realised I'd chased that, bang, I was out. And it's just giving 12 ticks away to the market. You can do that from time to time, just don't make a habit of it. And the next trade was obviously scaling a little bit more gingerly, a little bit cautious, taking 10 off the table, taking 14 off the table, coming back, realizing it wasn't right, having a trail and getting stopped out break even, fine. Happy to do that, managing my risk. That's what it's about, guys, managing risk. Anyway, on to the better trades, on to the meter trades. I knew I have to wait now for the indices open, for the Dow open, S&P open, the New York Stock Exchange open. Bang, here we go, we're open, we're at 230, and off we go. Now, I like this because it hasn't pushed higher, it started to push lower immediately from the open. I'm looking for a little pullback to get short. Let me get these trades back up, and here we go. We start off the short, just off the open, 9 minutes after the open. It's proved itself as weak, and I start to scale in the 78.5 and add to the position at 72. It looks here, so the average there, whatever that is, 76ish, a bit less. I then start to I take off a bit of the position as we start to lift back up. You can see the arrow here. I don't like the fact that we've bounced and we haven't taken out that low quickly. And in true risk management, that's what I'm all about, guys. Risk management. I just trim the position. I trim that position because it's quite a reasonable size position. I don't want to be taking much heat on this, and I'm looking at it thinking, it's a little bit wicky. The candles are a bit dirty. It's not that clean. I like it because it hasn't pushed up higher, it's rolled over, we've pulled back, but then it just sort of consolidated here. And up to this point, if I get the drawing pen, up to this point, it looked okay. The attempted push higher, really struggling with that level. The open, the drive at the open, the little pullback, that's what I'm taking. I'm looking for a break of this pretty quickly. Didn't get the break pretty quickly. And as you can see here, I'm taking some out at 76, 75, which is a few minutes later. Started off at 39 past, 40 past, then 47 and 52. You can see I'm just taking a bit off the position, which is around here, because I don't like it, and it's about my break-even point. So I just have to take some of the risk off the table. I don't want to take a big hit. The tape looked okay, and then it didn't. The setup changed a bit, but I still liked it, so I kept a core short position. So anyway, it popped up. I took a little bit of heat on that, and at that point I'm glad, saying, okay, well, let's just keep this short position on. It's not a lot, you know, not a lot of heat, well then parameters. I've taken the risk off the table. I'm taking the risk off the table. I've reduced my risk. I'm in a losing position at the moment, but I quite like the position still. Let's see how it responds to the VWAP. It's all about price response. The price got to there and it rejected, so I'm quite happy now. But I'm still keen to take the risk off the table as soon as I can. So 14.57 as we push down here. You can see I scaled out 60.5. So into this pulse here. So that's nice. It's taken 15 ticks off the table there. And now I'm just sitting with the position and just running with it. I'm happy. The risk's off. If it now starts to push back up here, it's not going to work. I'm going to ditch it. But fortunately, and I'll be quick here because I've run on quite a long time, you can see what my exit strategy was. Just basic into pulses, as I've always talked about before. Scale into pulses. If you can. So next one there was 1507 was at 48, which was here, which was this little wick down here, which was nice. And then 1513 a few minutes later, 41.5 was the average out there, and that was just as we pushed down into this and started to consolidate. So all nice take reads for the exit. Just got a few left here now. I can sit through a retracement. Perfectly happy with this. Then we started rolling over there, and here we go. We're starting to talk turkey now. Rolled over. And the last two scales you can see there at 602, so just front running that 96 level. And actually, it looks, I don't know because I've got the exact pinpoint in the exact time for that, but it looks as if I let it roll through. And actually, you know what? I remember this. Now. It was a market order. And unfortunately I got a bad fill on that because I was trying to work it and be clever as it came under the 96, give it a little bit of time. It just popped back over and ended up getting an average of where is it, 96.02 and a half. So yeah, it wasn't too bad, but could have been a little bit better. Again, sitting through this, happy to sit through this because the action is still weak, got no reason to close, and then bang, rolled over. And the last scale there, you can see the last one there was at 95.70, which was just around here, and actually it was nice, because that was the low of that move, and read it right. But the point is, not perfect. Started the day off on a bad foot, chased a little bit, chasing. It's rare for me to do that. It is rare. I'm generally quite good at waiting for the retracement. For whatever reason, I chased it, but then I realised straight away that I'd made a mistake with that. Just get out of position. I'll take 12 tick hit, and let's not worry about it. Let's reassess. Take another trade straight after when I realised that actually it's okay, reassess, it's a pullback, it's okay, fine, scale out, pushes back up, make sure I'm managing that risk coming out, making sure the trade's not going against me. Then when I realise, you know what, it's a little bit choppy, it's a little bit dirty, let's just wait, pull back, sit back, should I say, wait for the action, wait for the US Open, let's wait for the action, look for a better setup. Then we've got that, rolled over, got a little retracement, again, all about managing the risk, guys. It didn't do what I expected, so I'm there, boom, 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 taking a bit of risk off the table because I think I might have to sit through a little bit of retracement here because it hasn't done what I wanted to do, which was push down straight away, take out that low. So I'm immediately managing that risk. I'm not sitting in and hoping. I'm being proactive. I'm saying, you know what, it's not done as I'd like. I've got a reasonable position here. Boom, 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 put those orders into the market, get out of them. Happen to be at a nice break-even point for that. So all I'm doing is reducing the size of the position. And yeah, it rolled over. Would I have preferred to have a larger position? Of course I would. But I'm managing risk. That's all I'm concerned about. I don't want to sit through this and it pops through the high and take a full stop on a full size position. No, thank you. I'm always looking to manage that risk, as I was a few days earlier when we started to push up. Yes, I scaled in, but on that last scale, you know what, I wasn't going to give that much room because those are the things that hurt you. If you've got a full position, you're taking them. It's taking a lot of heat. It's pushing against you. You need to be able to manage that. If you are scaling in to a position, which I never normally would do, as I've said before in a lot of my videos, and especially with the YM, you don't really need to, and a lot of times with crude oil, you don't really need to either. But when it's a bit more volatile, you have to almost look at it in chunks of 10 because that's pretty much the way that it moves and the volatility there. And you can see even those few minutes there, it's 50 ticks. So it's a little bit more active. And as I talked about in August and September of last year, the Dow, that's when you had to use a bit more of a scaling strategy. But anyway, risk off. And just scanning into the tape, guys. Tape pulses there, and you can see quite nice little reads. There, out, and then a final out down here. Not quite at the bottom, but hey, I'm not going to complain. That was still, a very, very nice trade. So that's it. I mean, we've been consolidating for quite a bit, and we'll see what happens. We'll see what happens. I'm not making any predictions. I'm just trading the price action. This stuff going on the Dow, made some good Dow trades, made a few little duffers on the Dow as well, but nothing significant. I think that's when you're switching between markets. And actually one of the Dow trades went 50 ticks in my favour, 58 ticks it was. This was on the last scale, by the way, and this is what happens when you move from two different rhythms of market. Crude oil, you got 100, 200 tick moves, and the Dow, I had a last scale and I had 58 ticks in my favour, and I let it come all the way back and just took a 10 tick profit on that last trade. And I actually thought, you know what, that just proves, you've really got to be on the ball in terms of switching between markets, because they're two completely different markets, completely different rhythms, and 58 ticks on the Dow is not a bad trade, and I don't know what I was expecting out of that. And I was going to talk through that, but I've gone on and on, and we're over half an hour, so apologies for that. So anyway, guys, I hope you're keeping yourself out of trouble and putting those profits in the bank. This is the time to do it. It's the time to focus. The market's moving nicely now. It's exactly what we want. We were a little bit moaning about last week, saying that it's a little bit quiet. We're just putting little bits and pieces in the bank. We weren't doing anything special. But now's the time to run the trades, make the trades pay you. If you're right, make it pay. Make it pay if it's right. Don't let it do any damage, but make it pay. If it's working for you, run it. Look for those final targets and look for sort of what you can expect from that sort of market. Yeah, keeping that risk managed, that's the key thing. So that's all I've got for you guys. If you haven't signed up for the email alerts, then do so on the site. There's a little widget thing on the right, on the main page, on the front page, the home page. That's what I'm looking for, home page. Make sure you've signed up for that, because that's where I will be announcing when the program's out and it's available. And I keep thinking of new ideas for it, and it's going to be great when it's out there. Worth waiting for, honestly. But yeah, you need to sign up on the right hand side there to get that email. So you have to keep checking back on the blog, because I know it's a pain having to keep coming back and checking. So if you sign up for an email there, I'll send you an email out and let you know when the new stuff's updated. Okay, guys, take care. Good trading, and back with another video whenever, maybe next week. Take care. Bye bye.